I'm sure you won't be amazed at this, but 5.4a Part 3 picks up where 5.4a Part 1 and 2 left off, which was basically here, but they told us that we had sold a total of 1,400 units, leaving us 400 units in ending inventory. And that's our task, is to determine the cost of those 400 units. Now, your book says you compute the cost of goods sold and you compute the ending inventory. I think that's stupid, because that means that you can count stuff that's not there. You can count the inventory that's sold. I don't know how you would do that. Or your employees are so honest that they would make journal entries that would say, debit cost of goods sold, credit stuff I stole. I've never seen that entry. So I believe the easiest thing to do is count what's there and subtract. So if you remember from Part 1, we found out that altogether we had $77,200 worth of stuff. So, given that, our beginning inventory under FIFO includes everything, but what we need to do under FIFO is we're saying we sold the oldest stuff first and we kept the newest stuff. So under FIFO, we sold all of the old stuff. So we sold all of the stuff at $45. So we sold 600 at $45. Let's write this down, because if not, you know that I'm going to forget it and screw it up and get you all bollywoxed, and I don't want to do that if I possibly can. So under our cost of goods sold under FIFO, we have all 600 at $45. At $45. We also have under FIFO for units sold, cost of goods sold, we have 400 units at $42. We also, under FIFO, have 200 units at $27. Remember, FIFO, we're selling the oldest stuff first. We're keeping the newest stuff. So under FIFO, we still haven't accounted for all 1,400 units. We've accounted for 1,200. So we have to account for 200 more. So we have 100 at $50. So we have 100 at $50. And does that give us all of them? That's 6, 4, 12, 13. No, we need one more. We have 100 at $46. That's our cost of goods sold under FIFO. When you add that all up, it comes to $58,800. And then your book says, now compute the ending inventory, which is under FIFO, the 400 newest units. So that's these. So we have 400 at $46. And that gives us 18,400 as our ending inventory. That's our ending inventory under FIFO. So we can be good, diligent students and write down ending inventory 18,400, cost of goods sold 58,800. We could do that if you wanted to. There are a couple of terms that come to mind for doing that method. Stupid jumps off my lips first. Think with me. We had $77,200 worth of inventory. We have 400 units left at $46. Take 77,200 minus 18,400, and what do you get? 58,800. So if you simply take the total goods available, subtract the ending inventory, you get the same exact answer, and you save a whole lot of mishmash. Now, I got to tell you, when I was in practice, if somebody came to me and said, "Oh no, I want you to do it this way so it takes longer and I can pay you more money," I may still be in practice. Nobody ever said that to me. So let's do LIFO. LIFO is kind of bass-ackwards. LIFO makes pretend that the newest stuff came in and you sold it. So the last stuff to come in, the newest stuff, was the first stuff that went out. You would never do this in real life. Imagine you go to a grocery store. If they really did that, imagine how sour the milk would be. But you can act like it. It's a cost flow assumption. So under LIFO, we're saying that we have 400 of the oldest units left. That's these. So the ending inventory under LIFO is 400 units times $45. That's $18,000. That's the ending inventory. Now you can go through all that nonsense and count through, and I got this, and I got this, and I got this, and I got that. That's fine. If you have that much time, take up a habit, get a boyfriend, get a girlfriend, get one of each. I don't have that much time. I know that if I had $77,200 all together, and I have $18,000 left, I can do the subtraction. 77,200 minus 18,000, my cost of goods sold is 59,200. Okay? Weighted average, refer back to this. What you do for weighted average is you take the total dollars, divide by the total units to come up with a make-pretend average kind of sort of price for all the units. It's a method that is very common. It's used quite a bit, but it really makes no sense. And here's why. When you do that, when you take the 77.2 and divide by 1,800, you come up to $42.89 per unit. You didn't buy any for $42.89. You came close, but you didn't buy any at $42.89. So like all averages, it's useful in total, but it tells you nothing about individual members of the sample. But for this, we act as if that's what we had. So we have in our ending inventory 400 units. That doesn't change. And each of those units cost us $42.89. And when you do that math, you come up with $17,156 in ending inventory. Subtract that from the 77,200, and your cost of goods sold is $60,044. Again, if you wanted to, if you're really anal and you're really hung on doing it exactly the way the book wants, you can take the number of units sold, what was it, 1,400 units, multiply it by 4289, you're going to come up with the same number. Now, specific identification, this depends on giving you additional information. And for specific identification, you have to take a look at the units that were sold and purchased, okay? So, under specific identification, we sold 100 units at $42. Because they tell us that at the very top. In 5.3a, they say they had the following transactions. The units sold, 600 units from beginning inventory, 300 units from February, 200 units from March, and 50 from August. That's the units that were sold. So, the ending inventory is what's left. Now, for specific identification, you can do either way. You can either do the cost of goods sold, or you can do ending inventory and then compute the other. For this one, I'm going to do cost of goods sold because the numbers are easier. So, I'm told that the units sold consist of 600 units from the beginning inventory. So that's gone completely. So for specific identification, I can just rule that one out. And then it tells me, and I'm reading this right from the book on page 266, 300 units from the February. So I have 300 units sold, so I have 100 left. I have 200 from the March purchase were sold, so they're gone. 50 from the August purchase were sold. Okay, so I sold 50, so I have 50 left. And it tells me that 250 from the September purchase were sold, leaving me 250 units left. This is primarily used when you can identify the item or when it's required by law. Gun dealers have to use specific identification. Car dealers do. Narcotics sellers, and I don't mean like the guy at 9th and Christian, I mean like Glaxo or, the big dogs. They have to do that. Any explosives manufacturers and retailers, they have to keep specific identification. So, altogether, our ending inventory is 100 at $42 per. So we have 100 at $42 per. We have 50 at 50. And we have 250 at 46. Notice I couldn't get through the whole thing without screwing up the way I recorded the numbers. So that's my ending inventory. You could have just as easily gone through and done the other way, but again, you're dealing with bigger numbers. I like dealing with smaller numbers. I'm not that bright. And when you add that all together, that comes to 18,200, and 18,200 from 77,200 leaves us with 59,000. So, the areas that you can screw up, you can forget if you're looking at ending inventory or cost of goods sold. Remember, the assumption is that here's your inventory dollar, okay? Pick your famous dead white guy in the middle. When your inventory is sold, this half is cost of goods sold, This half is ending inventory. It's a zero-sum game. You cannot have a bigger number than, in this case, 77,200, is it? Yeah, 77,200. So in this case, our inventory dollar is 77,200, and that's how we split it up. It's either in ending inventory or cost of goods sold.